Hi all, thanks for being here. I'm Lorenzo, the head of research at Dealroom, and together with me there's Simon and Nicolas. Do you want to intro yourself?
Hi everyone, Nicolas Autret here from Walden Catalyst Ventures. We are a US fund investing globally in deep tech startups, early stage, based in Paris, covering Europe, and super happy to partner once again with Dealroom and Lakestar on this new edition of the European Deep Tech Report.
Thanks, Nicola. And I'm Simon King. So I work with Lakestar as a partner focused on deep tech. Lakestar is a European-focused generalist firm with offices in London, Berlin, Munich, and Zurich. And I've been investing in deep tech for the last 15 years. So I joined Lakestar recently, and this is my first report. It's a real privilege to be able to work with the team at Dealroom and Nicolas at Walden Catalyst on the report, which came out this morning. Very exciting.
Yeah, no, and to start off, this is actually the fifth edition of this report. So now really like a key pillar of the European ecosystem. So every year we evolve something, change a bit the topics, the analysis, the contributors. But it's we always got a really great feedback from all of you. Also nice, ideas to how to evolve, what to add. And so, I hope you will enjoy the 160 pages when you get the chance in a long train or something to actually, read that out. First of all, when we talk about deep tech, we talk about, innovative, scientific or engineering breakthrough that gets applied, in like companies for the first time. And of course, there's progress on some of these fronts all the time, but there are also some waves. So sometimes, there's something that happens particularly important that, kicks off a new wave of innovation. So for instance, in here we put some example, the personal computer, cell, smartphone, internet, and lately the generative AI. And, all of these create generational companies, worth like, trillions in market cap or so on. Some winners are losers. What's probably, like particular of this wave is like just the speed, it builds up on everything that came before, like, the internet, the connectivity and everything, but the speed of adoption is very, very fast. Then we can discuss exactly what it means adoption for AI, but like the exposures is really fast, like 1 billion users in 3 months. And when we look at Europe, we really believe that Europe has all the raw ingredients to build, these generational deep tech companies. Like we missed, a couple of these waves for sure, but we have the skills. Like we will show it also a bit later and discuss. We have 2 times the number of 10 graduates than the US. We have a lot of the world top universities. The talent is clearly there. We just need to nurture it, to give it the right space to build something. The market opportunity, I think we are at really a shift in this because we have been talking a lot about sovereignty in Europe, but in practice, there wasn't really that strong of a push until recently. But now geopolitics and some other consideration, we're really seeing government shifting the budget, using procurement strategically and so on. So that, we think there's real, adoption and opportunity for startup. And on the capital, deep tech fund is on the rise. We will, discuss this at length and show you in a bit. So first of all, we start from everything that's not deep tech. So when we call this regular tech and includes fintech, SaaS, marketplaces, all the rest. And when we look at that in Europe, we see that there's been a bit of, recovery, but it's still like 53% down compared to 2021, the zero interest rate with a lot of funding going into startups. And when we compare this with deep tech, it's a very different picture. Deep tech is like almost at all-time high, like just 4% from this peak, and also growing 20% from last year. So, definitely there's like some resilience and momentum in the deep tech market specifically. And, all in all, this means that now almost 1/3 of the money that are flowing, into startups in Europe are going to deep tech startups. And this is, twice the share that this startup were claiming 10 years ago. So like deep tech is like really now a cornerstone of the ecosystem, while 10 years ago it was a bit more like say niche in terms of allocation. And yeah, where this funding is going geographically, well, the big three still, kind of dominate, UK, France, Germany. And then there's, some very strong deep tech market that we see in there, like Finland, Switzerland, Netherlands, or like smaller nation, but, playing quite strongly on the sector. And when we look instead at the cities, it was a really standout year for Paris, that for the first time was on top ahead of London. Driven by a lot of momentum in AI with Mistral, Gradium, and so on. Future of computing with some quantum, like Alice and Bob and Visora, and some novel robotics. But yeah, really good year there. Then London and Munich, very notably in the top three with the space and defense momentum. And we can also visualize it a bit more like graphically. This is a lot to take in. There's a lot going on in this slide, and we have a live version that you can see in the full report. So in there you can see these maps, interactively. You can see which companies are in there in each hub. So I invite you, to check the full report. But basically, the key hubs vary from one topic to the other. Well, London, of course, London, Cambridge, and Oxford in general, it's a very big hub for most of the topics. But Munich comes on top in defense and space, and Zurich, notably in novel robotics. So where is the most activity can slightly different from one sector to the other, and there are some specialization.
Yeah. And I think it comes as no surprise, right? That those real hubs are centered around the top technical universities that we see in Europe. And I think it's always been true that Europe has had the technical talent, right? So, we see a third of the top universities for deep tech subjects in Europe, and kind of all of the hubs that we've seen in the previous slide represented here, right? With TUM in Munich, right? ETH in Switzerland, Cambridge, Oxford, and Imperial, and the London universities, right? Because that's what you need to create these kind of super innovative deep tech companies. You have to start with the technology. We see now, a third of the deep tech companies that come out each year are spin-outs from research institutions. So it's not surprising that this is where these companies are clustered. It's also great, right, that we see that Europe has these deep technical pools of talent. So I think you mentioned earlier, Lorenzo, 1.5 million STEM graduates per year coming out of European universities. That's twice as many as we see coming out of the US. Europe punches well above its weight in certain areas in terms of patenting, right? So 20% of the world's top patent applications, or patent applications, 20% of the world's top 10%, top cited papers in different subject areas. So that technical talent has always been there. It's great to see that increasingly, we've got the commercial talent that's supporting that technical talent, right? You can't create companies just with researchers. You need to have the product managers, the HR departments, the finance departments, the BD and sales teams that are going to support those technologists. And we now have 4.6 million kind of tech workers in Europe. It's been growing at 9% over the last 10 years, which is fantastic. So it's good to see that complementary pool. So I think Europe has the talent, right? We've got the technical talent. We've always had it. We have the commercial talent to support as well. And we're starting to see, that plus the capital pull through into creating valuable deep tech companies in Europe. So it's great to see this statistic. So European deep tech companies combined, right, now worth 690 billion. So more than ever before, continuing that really strong growth. I think in this chart, super interesting, we can see the value broken down by the different cohorts. So, in kind of 5-year bits, and on the right hand side we have the companies, or the biggest companies, that are kind of driving each of those cohorts. So really interesting to see, ARM obviously from an older cohort, but still growing pretty strongly there as well, which is fantastic. And then if we look kind of a little bit deeper, then what does the pool of deep tech companies look like? Well, we've got nearly 8,000 companies, deep tech companies, European deep tech companies, that have raised more than $100,000 in funding. We're adding 900 new companies each year, which is fantastic. And we're starting to see those, move through the pipeline. So we now have 125 companies that are either kind of unicorns or thoroughbreds. So there's companies valued at more than $1 billion, or generating more than 100 million in annual revenues, which is super to see.
Thanks, Simon. And I think it's very interesting to look also at how Europe compares, right, with the rest of the world, and particularly US and China. And so if we look at the big picture here, I think there has been a fundamental shift in the way venture capital money is flowing globally, right? So in deep tech today, we see that globally today we see that deep tech accounts for something like 40 to 50%, and that's essentially double or triple the share of what it was 10 or 15 years ago. We mentioned earlier that Europe is accounting for 32%, right? Deep tech 30% in Europe. And while this is, I think, a positive trend that we've seen in Europe, I think it's still lagging behind US and China. And I think today there has been a realization, acknowledgement that deep tech can be at the core of innovation, and essentially fundamental piece to drive geopolitical dominance and the next wave of innovation and prosperity. What is interesting to look at is, what's the driver of this growth? And I think the intersection of AI in deep tech is the one key sector driving this growth. We see that in Europe, where 50% of deep tech investment is going to AI. But if you compare that to the US, it's 85%. And so I think the key message here is that AI is just no longer just software. It's actually at the core of our economies and societies. AI is making its way in our everyday lives as consumers, and also making its way in the corporate world. AI is the fundamental piece driving productivity in the corporate world. So it's really a strategic piece for US, Europe, and China. But let's talk about a bit like the elephant in the room here. The funding gap is massive between Europe and what we see on the other coast, right, in the US. If you look at the overall deep tech funding, it's about 140 billion in the US across all categories, compared to 20 billion in Europe, right? So we already have a 7x difference. But if you look closely at AI in particular, as we mentioned, it's about 50% in Europe, so about 10 billion, but 85% in the US, or in other words, 120 billion last year invested in AI. So 12 times difference. And of course, if we look closely, companies like OpenAI, Anthropic, and xAI had double-digit billion rounds last year. So that's a big driver of this gap, a big explanation. And to be honest, a lot of this funding goes into building the infrastructure. So buying NVIDIA chips, buying memories, buying interconnect, buying real estate. Not necessarily on the, let's say, model development, but more on the infrastructure. But still, you need infrastructure to drive innovation in AI. And so we see a huge investment made by US companies and not so much in Europe. And where this gap hurts the most is at late stage. I think we've seen a maturing ecosystem in Europe over the last 10 or 15 years. If you look at early stage funding, seed, Series A funding, I think it's well covered today. We have a lot of sophisticated institutional investors at seed and Series A. We have, I think, a vibrant ecosystem of business angels taking early risk. But comes time of Series B rounds, when you start raising 50 million or more, it's very complicated for European entrepreneurs to find domestic investors. And what we see is for these mega rounds, and even more the mega plus rounds of 250 million and more, a lot of it is funded by non-European investors. Actually, 70% this year, 70% in 2025 was funded by non-European investors. And that trend actually is not good, because 2024, it was 50%. So, call for action here on the funding of late stage companies. So, that hurts, and that hurts even more because, when we look at the conversion rate and the exit rates in Europe versus the US, well, I think US show consistently higher performance when it comes to conversion and exit rate. And what this means is that, the economic value, we have the opportunity to build great companies in Europe. We do. Really, we have fantastic talent, fantastic IP, and we're building great companies. But the fact that we're missing late-stage funding, hinders a bit the success of our companies. When you look at exit in particular, and that's really, I think, where we probably need to have a deeper discussion. When you look at exit value, 3/4 of the exit value is actually captured by US acquirers, whether we talk about US financial acquirers or US corporate acquirers. So in other words, we build these great companies in Europe, we create employment, we create IP, we create great products, and then when we have to exit, 3/4 of that value goes to the US. This, I think, really raises a sovereignty question that we need to answer as a global ecosystem. So, what I think the three of us and many of us involved in the report are very enthusiastic and optimistic about deep tech in Europe, about what the future holds for us. While we see talented entrepreneurs every day and working on very disruptive technologies and trying to build global category leaders out of Europe, there are a few challenges that we identify in the report and that we discuss at length. We invite you, of course, to read through the slides, but I guess the funding gap at late stage is one we just discussed. It's a big one. I think Europe is also well known for innovating in regulation. That's clearly, I think, the regulatory hurdles is one that we need to address also in our ecosystem. I guess having the flywheel spin faster and having more innovation come out of our academic ecosystem is another challenge I think we need to address. And lastly, collaboration between startups and corporates is an area where I think the US is leading the way and where our European corporates should be inspired from.
Yeah, and we will discuss this a bit more in after when we have the full discussion. So
I mean the slide here, we obviously talk about deep tech as a whole, but within the report we've pulled out 7 kind of key deep tech focus areas, which are the areas where we're seeing the most strong growth over the last few years. So we've already talked a little bit about AI. That's the biggest section here, but we're also talking about future of compute, which is photonics, quantum computing, and then obviously defense also has been a very strong driver for growth over the last couple of years now, getting up to, I think, 43% if you include all the kind of defense and resilience in terms of deep tech funding. And then space tech, computational biology and chemistry, novel energy, novel robotics. So, within the report, we dive deeper into each of those sections. We invited lots of contributions from founders and VCs. to share their thoughts on where they think the most exciting areas are in each of those. And so yeah, I think we're going to talk a little bit more about some of those now.
Yeah, no, sure. So I think we can get started from novel AI, like surely very polarizing topic. Like we were so like this brief picture is, of course, yeah, that there's very strong growth in Europe, 3.4 billion in 2025, which is like almost 3 times as much as 2 years ago. Lot of foundation, like a bit of foundational model, and like let's say foundational model for specific application like image generation, so on, but also like AI for like AI native engineering or world models, so like some kind of newer areas in there. And we saw the massive gap that Nicolas was telling before, like 12 times in funding. So I guess yeah, the big question is like how can Europe play in this? So do we look only at the new frontier and we say give for granted that the foundational model is a bit something we don't want to play in that kind of ballpark of money, and while we can maybe win on specialized application and world models. So maybe starting from you, Simon, what's your take?
Yeah, well, I think it's going to be impossible to catch up with the US in terms of funding those foundational model businesses, right? I mean, we saw the gap. 122 billion plays 10 billion. XAI, Anthropic, and OpenAI, right, raised between them 81 billion of that 122 billion last year. So that's all going into foundational models. So I think it's going to be very difficult for Europe to compete on that kind of scale with that kind of capital behind it. That doesn't mean it's a lost cause, right? Because as you say, there are lots of areas of AI where I think Europe has a distinct advantage and where there's everything to play for going forwards, right? So, one of the areas that I think a lot about at the moment is we're starting to see the end of scaling laws in LLMs. And that's not just scaling laws in terms of model size, but now also kind of time, right? We're allowing these models to use more tokens, go through more loops, and that's provided some additional kind of performance improvements. We're starting to see that tail off as well. And I think when you play with these models, after a period of time, you get to the conclusion, okay, there are going to be some applications where you can't just hand everything over to the models. They're still giving you hallucinations. You wouldn't trust a customer service agent without a human in the loop. You wouldn't trust one of these models to give financial advice, and not break the regulations.
You were saying that you installed OpenClaw, but not on your main laptop.
No, exactly. My OpenClaw runs on an isolated network and on a Raspberry Pi. It doesn't touch any of my data because these things just go around handing out information. They are the most eager puppy. They're super keen to please, and they'll break every law and regulation.
There was a very cool index recently, like the bullshit index, one of the new ones of the to evaluate LLMs, and they were just giving it like kind of true application, but switched to be like slightly false and asking to argument. Like it tries to please you a lot.
Yeah,
so
exactly.
It kind of whatever you tell it, it's like yeah.
I think all of these models essentially took the world by surprise a couple of years ago, and I think we've all been super impressed by the capability that was essentially brought to our hands and at the tip of a finger, right? I think now the question today is, would you trust, these models with mission-critical tasks in the enterprise world? And I guess at this point, the answer is, I think, largely no. I mean, there are a few exceptions here and there, but I think that's clearly the question of performance is set. And I think we may have a shot to bring more efficiency and more performance in Europe. I think we've seen a couple companies being funded recently that are especially, aiming at that. I think AMI Labs in Paris and Ineffable Intelligence in London, I think are two companies that received massive round of funding over the last months and which are trying to do it differently. Aiming for the same goal, but with a different way of doing things. If I take a step back, I think Europe, in history, is probably known for elegance and efficiency when it comes to technology. I often compare, with the car industry. I know I've made that comparison with you guys before, right? If you look at American cars versus European cars, very different. And I like to think that in this novel AI world, we'll probably take a similar approach towards something elegant and efficient and trustworthy. Versus the US. So sure, today, if you look realistically at the situation, US companies have received gigantic rounds of funding. They have this huge infrastructure being built out. And I think that's the necessary fuel to drive innovation. I'm still hopeful that Europe has a chance.
Yeah.
And let's be clear, right? I think the models that we have, obviously, you can't trust them 100% for certain applications, but that doesn't mean they're not going to deliver value. I think there's a huge number of valuable applications that that we're only just beginning to explore there. And I think there's a kind of level playing field across the world, right? Both in China, Europe, and the US. Yes, they'll be built on top of US models, but that doesn't mean that all of the value is going to be captured there, because I think there are lots of applications to go after. But as you say, right, it's at this kind of innovative edge where actually, what's the next step beyond LLMs, where we start to see, some interesting things happening in Europe. So that, world models up on the chart. These kind of big rounds that we've seen just this quarter from AMI. Labs in Paris, right, and Ineffable in London. So.
Yeah, and also General Intuition, that very strong, from Switzerland, starting from gaming, still more model oriented, and definitely on there it's all open. So I hope so. In here, like we were just showing that all top seed rounds all time in Europe are in deep tech, but like 8 out of 10 are in kind of novel AI and AI for robotics, and a lot of them is just the last 12 months. So we really see like a very strong acceleration. And the first, couple of 1 billion plus seed rounds, whether we think that's, kind of too much or not, but it's still nice to see Europe betting that big on something. Yeah.
And I think, one key strength we have in Europe is talent. Because when you look at most of these companies, the foundational model companies in Europe or in the US, a lot of the engineers and researchers are actually Europeans. And so we have that IQ locally in Europe. Now, I guess the challenge is retaining that IQ in Europe, making sure that, or providing them the opportunities locally to build things locally. But we have that talent. We have that academia background that trains exceptional talent, and that are the necessary IQ behind all of these companies.
Yeah. Yes, and a lot of that's still here, right? Obviously, Google through DeepMind, a lot of that is based in London. We see increasing numbers of companies setting up in Paris to take advantage of the phenomenal, applied mathematics pedigree in France. So, there's a lot of that already here.
Yeah, and we also did recently an analysis on AI talent, and what we saw there was that in the last decade there was a clear migration, AI talent from Europe to the US. But like, in kind of the last 2 years, it almost closed. So it's kind of, now the net migration is kind of almost zero. So we are seeing a lot of talent coming back from the US. And, so we're now also having like that opportunity, also driven by geopolitics, the rest, like to retain this talent a lot. Yeah.
Yes, and look, and one thing that struck me, Nicolas, when you were presenting the slides earlier, was talking about AI being not just the software, right? So it includes everything down the stack, and so that we're also starting to see some really interesting things happening in Europe at the infrastructure layer as well, right? We've had a couple of big rounds. Olix raised $220 million for photonic compute. We've got a couple of players in that space in Europe, Quant, right, out of Germany, and others, and then Accelera as well. $250 million round just recently too. So I think there's also the rest of the AI stack looking down, where it's obviously changing at a phenomenal pace. Where currently demand is outstripping supply of compute, and part of that's driven by power, and there are obviously bunch of technical bottlenecks that we need to overcome in order to be able to deliver the kind of compute that we're going to need in the next few years.
Yeah, clearly, I think the future of compute as a category is a particularly exciting one. Obviously, again, we see massive investments in infrastructure in the US. So it's essentially building data centers, so real estate, and then you buy servers with chips and memories, and you interconnect all of that. And today, it feels that we're using brute force to build this infrastructure. It's highly inefficient. And anybody using NVIDIA chips knows that these are the most powerful chips in the market today, but they're highly inefficient because most of the time they sit just idle, waiting for the data to come in to do the compute. And so there is a need for efficiency, and most of hyperscalers and people using NVIDIA chips are highly frustrated with the cost, the availability, and the performance of these chips. And so that's why we've seen a huge number of companies innovating in that category globally, but also in Europe, through different ways and different means. And so you mentioned Olix, right? Arago and others in the optical compute space, Optalysis, for example, in the UK as well. So that's one area.
Science Lab,
Exactly.
There's a lot of them.
Yes, absolutely. And we also see, opportunities at the interconnect, because today, all of this infrastructure is essentially running on copper, which we know is bad for heat dissipation. How do you switch from a copper-based infrastructure to an optical-based infrastructure? So lots and lots of innovation in that category, and I think particularly in Europe. I think we have
Europe's
a great talent.
It's got a great pedigree for photonics in the past as well, right?
Yeah.
And I mean, it's crazy that people are talking about, well, over the next couple of years, compute is going to take up 10% of the world's energy. I mean, that's huge, right? We're now getting
energy growth.
Energy, energy, of course.
Growth,
growth. We're now talking about putting data centers in space, right?
Yeah.
Partly driven by the power requirements and the length of time it takes to get a grid connection for your new data center, and photonics solves a bunch of that, right? I mean, it's much more power efficient.
Absolutely.
Yeah. And
then there is
to quantum, we are seeing photonics more directly on the market.
Yeah. I was just about to make the point about quantum. I think quantum is yet another category in terms of future of compute, and I think we have just leading the pack in Europe. We have tons of hardware quantum companies in Germany, in France, in the UK. Lots of funding as well. Probably a bit more remote in terms of market readiness and time to adoption. But when we talk about multiplying the compute power, quantum might be the answer there. But probably longer time horizon.
Yeah, and there was a question in the chat that we have. So it was a standout year, 2025 and the beginning of this year for quantum, for sure in Europe. Massive fundraising, we see also in this slide. And for instance, EQM, yes, is going public. And yeah, of course, it pains us to see it a bit. It's going public, in the US,
right.
in Nasdaq, of course. In the full report, we did a short analysis on the kind of listing in the last 5-6 years of notable deep tech companies from Europe, and there's 22 that's it.
I think it's 18 companies going public at a valuation of 500 or more.
Yeah, the 22 in total, and 18 went to Nasdaq.
Exactly.
So that's just the reality. And of the 4 that stayed in Europe, 2 are not listed anymore because they got acquired by the US. So yeah, that's I don't think EQM had any choice, honestly. They, at that valuation, 1.8 billion in quantum, I guess there wasn't that much to do. But of course, these companies are backed a lot. In the example of IQ Quantum, it's backed a lot by European investors. It's not one of those cases that most of the cap table is US. So there's a lot of funds from Europe in there. There's public money and everything. So yeah, it would be, of course, great to see it retained. And in the report, we talk a bit about the challenges of capital markets, some improvement in there. I guess, that one day maybe this capital market union, but we are still far from there. And we try to put some thoughts in there from London Stock Exchange and Frankfurt and so on what kind of short-term action, they can happen. Like there was like, what can we do in the next 1-2 years? Like if the IPO SPAC, Windows is reopening, how can we make sure that a couple of these stay in Europe?
Yeah, well, I think, look, I mean, a couple of things to say. First of all, listing on Nasdaq doesn't necessarily mean that the company immediately becomes US, right? So the employees don't all up and relocate to the US just because they list there, but it does pull a kind of, generate a pull, because if your analysts are over there, if your shareholder base migrates over there, you just end up having to spend more time in the US. I think in terms of, reinvigorate or invigorating the kind of European public markets, it comes back to that kind of capital gap, the late stage capital gap. I think that's where a big challenge is, right? It's a lack of patient capital that really understands the value, and we don't see that in the private markets in the later stages, and we don't see it in the public markets in the later stages, and that's where the US is ahead, I think. So there's lots of reforms going on in public markets across Europe, right? There's a lot of political will there, because and certainly from my perspective, I see IPOs not really as an exit, albeit it does provide liquidity to shareholders, right? But it's a fundraising mechanism. If you want to raise, hundreds of millions, billions, public markets are a good place to be doing that. And if you want to stay a kind of long-term independent company and get up to the multi-trillion-dollar valuations, we see some of the US deep tech, VC-backed deep tech companies like NVIDIA, right?
Yeah.
You need to have access to
you can
capital raising market.
Yeah, you can. We used to say you could do that all in the public one, and we now seen a couple of companies almost get to that 1 trillion in the private market or raising more than 100 billion. So like that game has a bit changed, but at a certain point you need to go public. And we've seen the plans for the US with SpaceX, OpenAI, Anthropic all wanted to kind of get the right window to get that kind of capital.
I guess the question is, how do you provide sustainable capital? Because in deep tech, it takes a very, very long time to come to maturity, and so during all these years you need to fund the company, but at the same time your earlier stage investors need to show liquidity at some point, right? So how do you sustain funding of the company on the long term, and how do you provide liquidity to your earlier stage investors? So IPO is a mechanism, but obviously in Europe doesn't work so well. M&A, in Europe with European corporates is not so much of an option, and does not allow you to stay independent. I think there is now a rising trend on the secondary market, which allows to recycle the capital of the company. So that's another trend we're seeing. But that's, I think, the exit and liquidity is yet, I think, to be solved in Europe. I think we've solved many topics over the last 10, 15 years in the ecosystem. Exit remains one to be addressed.
Yeah.
And it's a critical one, right? We've seen these flywheels, right? So, venture ecosystems or startup ecosystems, they build in these progressively bigger cycles. So you start with, small companies and small funds, and they can invest small amounts of money. And then you kind of run out of steam, and there aren't those bigger funds, so you have to sell. But that's okay in the early days, because the founders go back in, they've made a little bit of money, their ambition level goes up. The funds have made a bit of money, they can raise bigger funds next time.
Yep.
So next time you go through that cycle, it gets bigger and bigger and bigger, right? But it needs to be driven by these successful companies and successful exits and recycling both the founders and the capital into that ecosystem.
And honestly, of course, it's, in terms of sovereignty, it's not the best thing when company list in the US. It's probably worse when they get acquired by US players. And that's what we were showing before, like 72% of the exit value in M&A came from US buyers, and that's both like a lot of strategists that, they pay that premium to get the technology at a certain stage and integrate and so on. But also like sometimes PE firms, they think that that European company it's undervalued, and both private or in the public market, and they acquire it, and then they make it grow a couple of years and then resell it. And I guess Well, we were discussing just before this, getting here to talk with all of you about River, like a robotic startup in from Zurich, and they just got acquired, like the very new startup, spin out from ATH, which has an amazing, robotic powerhouse. We were there last week on Monday with Nicolas and all the hosted at the Robotics Institute there. And, amazing companies coming out of there. This company was started in 2023 to do autonomous robotic deliveries. Got a very nice 22 million seed round. So, very strong traction at the beginning. That seed round was led by the Amazon family office. So already in there, something to be said. And then this week it was acquired fully by Amazon. And of course, it's a great validation, I guess, of the ecosystem, but also we could say, it's not going to be, a generational company built in Europe because it's already, acquired so early by a US corporate, and not acquired by, any of our European ones, for instance. So, no, something that we want to say about the intersection of robotics opportunity, but also
Sure.
this
So
challenge.
maybe just to comment on this acquisition. I mean, not this acquisition in particular, but I guess when you sell a company, you always have to question whether you're working on a feature or a product/platform, right? And then if you're working on one of these, then who are your customers? Who are your likely buyers? And I think to be fair for River, I think the most obvious buyer was someone like Amazon.
Yeah.
So I think it's a great outcome for them. Of course, it's a pity not to see that company grow and scale globally, but I think it's a fantastic outcome for the founders and for the early investors, and I think a great token of appreciation for the quality of that ecosystem in Zurich. The one comment I have is, even though I think there were probably not so many European candidates to buy this company in particular, I would love to see European corporates being more active, number one, in collaborating with European startups, and number two, being more acquisitive. I think US corporates for decades have understood that startups provide and external innovation provide a very nice way to accelerate their roadmaps. And so they don't hesitate to write big checks to acquire them. And I think we're left to see that in Europe. And it's a must-have, I think, in Europe, because again, as you mentioned earlier, that's really driving the flywheel, generating proceeds for earlier stage investors, and also generating successful entrepreneurs who eventually become mentors and then reinvest in early stage startups. So I'm urging European corporates to consider working more closely with startups and eventually acquiring them. I think it's absolutely necessary. To go back to your question about robotics, I think it's another category that I'm personally super excited about. It's not a new category, obviously. Robotics has been around for 4, 5, 6 decades, if not more. Already being deployed in some industries like manufacturing, particularly in automotive, also in warehouse and logistics. We have some iconic companies out of Europe in that category, like Exotech, for example, in France. And I think now there is a new wave of innovation in robotics driven by cheaper hardware, easier programmability, and new verticals embracing robotics, in the industry space, for example. And I think even more, a gigantic market opening up, maybe in healthcare, where we will need, because of shortage in labor, we will need robots to do things that humans won't be able to anymore. So I think in Europe, we have fantastic ecosystems in Zurich in particular, but also in Munich, in Germany.
The DACH region is
I think, just fantastic. And I think unlike I would say US robotic companies, we do have a very dense ecosystem of industrial customers, and that proximity with robotic startups, I think, is a key differentiation compared to other ecosystems.
Yeah, when we were in Zurich, they were telling, in like 20 minutes from here, you have billions in euro in manufacturing capability, which you don't really have that much in the US. Like in pure industrial manufacturing, Europe is, I guess it does 2-3 times more on certain, high value kind of manufacturing. Of course, yeah, we're losing a bit to China in some scale
Yes.
stuff, but like on
So
robotics, yeah.
supply chain, I think, is one key question we have, and clearly China is by far leading the way here. But I think today hardware is not so much the issue. It's probably more around software and availability of data to train application-specific models. With large language models, I think there were plenty of data publicly available to train models on. For robotics, you have no such data available. And that's why I think the proximity with industrial customers is an unfair advantage, I think, for European companies, because your customers are just a few hours away or a few minutes away driving distance, and then you can deploy your robot, access the data, train the robot, and eventually build a product.
Yeah.
Yeah, I agree. I mean, I think manufacturing these robots at scale is going to be hard to compete with China.
Yeah. Very hard.
At the cost point that they can do it, right? But I think you don't just need the hardware for those robots, right? What's really making the difference today is adding the intelligence layer in. So if you talked about the automotive robots that you might buy from a Fanuc or an ABB, right? It takes months of an engineer to go in and make those robots, do the same motion a million times. If you can shorten that time period down by adding an intelligence layer so that you can drop these robots in, and within a few hours, they're operating at 90-95% kind of efficiency, and then they train themselves, and over the next week or two they get up to 99.9% efficiency. Well, suddenly that really changes the value proposition for a robot, right?
But because like in one sentence, bullish or bearish about these humanoids? Is it all hype or like does it make
bearish
sense?
One word, bearish. No, look, I think I've spoken to a lot of humanoids businesses.
That's
right?
a $40 billion question.
No, yes, it is. Yes, it is.
Well, they already invested, I think, in VC funding. We're almost at 10 billion, I think, globally in humanoids.
Yeah, look, I think there are lots of challenges to humanoids. Most of the companies I speak to, they're constantly repairing hips, right, and legs. And obviously, if you lose power, your legs, collapse underneath you.
Yeah.
So my prediction is that I think the word humanoid is going to evolve over the next couple of years, and instead of meaning something that looks like a person, it'll probably end up meaning, something that broadly resembles, because it has a body and a couple of arms, but it's probably running on wheels because it's just a much more sensible platform in the short term. And for most applications, factory floors, they're designed to be flat so that you can get around really easily. Now that actually, I think form factor wise, there are going to be lots of different types of robotics. We've got the quadrupeds, which are doing fantastically well. Anybotics, right? We're going to have these versions of humanoids that are kind of wheeled, robots will have the robotic arms, which are going to be in situ. We've got the little, AMRs, which are kind of the automated forklifts that are going around. So lots of different things. But I think it's getting all of those working on, an intelligent platform, working together really collaboratively. I think that's where it's going to be really exciting.
Yeah. And I think going back to a bit more the policy angle and everything. So when we look at defense, security, and resilience, that was 43% of all funding in deep tech this year. So, in here it's not purely defense, it's also space, critical semiconductors, some like nuclear, some other topics that are, key for security and resilience in general. But like even pure defense, like 1.8 billion funding, like tremendous growth, more than twice last year, and I guess, beyond the funding, what's interesting, I guess, is the revenue side and how that's interacting with governments on the procurement. So, because we were saying before, okay, we want corporates to do, to buy startup, to purchase from startup. Well, of course, we want governments not just to give grant money, even we want them to be more like customers than grant givers in many cases. So I guess this is like the sector where we are seeing this evolution play out with this challenge, with this timeline.
Yeah, that's right. That's one of the 4 challenges we identify in the
Yeah.
report, right? Is getting governments and corporates to work more collaboratively with startups. I think European governments haven't done the best job in the past, right? If you look at the semiconductor industry in the 60s, 90% of all of the US output of semiconductors was bought by the Department of Defense, right? Compared to something like 5 to 10% in Europe. And that's really what built Intel and semiconductor industry in the US, and something that we haven't done so well in Europe in the past. And we've seen that change over the last couple of years in defense, right? Driven by geopolitics. It's now a necessity. We've got wars on our doorstep. And the nature of warfare is changing, partly driven by autonomy and robotics. But when you've got a $10,000 drone that's taking out $50 to $100 million worth of military kit in planes and tanks and things, that's an asymmetric war that you need to adapt to, and frankly the primes are not able to move quickly enough. And so where we're seeing the industry responding is really in startups who are moving very quickly. The number of drone interceptors that we've seen emerge in Europe over the last few years, crazy. And governments recognizing, okay, well, look, if the innovation is happening there, and this is the way that warfare is going to be played out, we're going to have to engage with the startup sector in a way that we haven't done before. And so we've started to see some movement from particular governments across Europe. I think Germany's doing a great job, for example.
Yeah, both space and defense, we've seen budgets. Yeah, of course, like a lot of that budget runs at national level in Europe. I guess that's always like bit of the challenge in navigating that. You don't have a central, but like, they are moving like in a way that it was not the case a couple of years ago.
And look, and my hope is that they see this works, right? And it starts to generate success, and then other bits of government recognize that it's possible, and the kind of cultural change, becomes more pervasive.
And I think there was some question in the chat about EU Inc., about regulation. And it was I don't know how many of you followed all the details, but it was a very active week about, EU Inc. And kind of this 28 regime. So I'm going to send also in the chat like an explainer that was built, what was delivered versus what was the expectation. Well, for sure, like, there are some good points in there. There's this, like digital incorporation in 48 hours across all countries. So, it is good to see, and it's good to see, I think, like the cultural side of this, like, startups being at top of the agenda for the EU, even if maybe, they didn't deliver all of our wish list, and it's not over, keep active, keep pushing, it's not over. We can still improve a couple of details, but seeing von der Leyen, the rest of the EU Parliament, having this top of agenda, talking about this, getting the name from the startup community, and still delivering something that a couple of years back no one was believing that was even remotely possible. It gives us also hope that we can do still a lot, and this is just the first step. So we will talk a lot more about EU Inc. in other channels and so on, but please, there's the explainer and everything, and it's still a landmark thing for the ecosystem.
It's a great step in the right direction, right?
Yeah,
we've just got to take advantage of the fact that Europe as a whole is a huge market, and if it was to work as one market, it would be fantastic.
And just
you
to
have
close
to start
off,
somewhere.
You have to start somewhere, right? So it's great to see.
Let's not be pessimistic. Like it's a good step. We can still push for more. Yeah, and of course, closing off for all of you, what we have seen today, it's all available. It's all built on the platform. So please get in touch if you wanna have access to any of this data. Find startup for your fundraising, for it to invest in. To see as governments, we have built, a lot of this mapping, together with Lakestar and Walden, also around the thesis in this report, so you can find, future of computing, quantum, all the areas that we discussed, frontier AI inside the platform, see the companies, see the trends, check, okay, what's happening in quantum computers in Europe, how the sector is growing, well, quite strongly, of course. And of course, the full report is available. So we'll now drop the QR code here, but you will also receive
I think, you know,
Yeah,
as a final comment on my end, I think, you know, we're doing this because we care, right?
Yeah.
We care about Europe, we care about sovereignty, we care about, you know, funding and building great companies out of Europe that will bring prosperity to our continent. So it's not about the Netherlands, where we are based today with Lorenzo and Simon. It's not about the UK. It's not about France. It's about Europe. And so we invite you, you know, to share this report with your colleagues, with your friends. We invite you to join the conversation, to comment, to share thoughts. You know, we're sharing our views. We don't necessarily pretend to be right, but you know, we like to set the conversation and have as many people as possible join the conversation, because we believe the more we are around the table, the stronger Europe will be.
Yeah, and thanks again to everyone, you know, that contributed. You know, if some of you are in the audience today, or all the others that are engaging, you know, let us know what you think. Even criticism, super welcome, you know, and whatever improvements, you know, we will keep, you know, responding, adding to next year edition. So please engage.
So I think with that, thank you guys. It's been a pleasure, and I look forward to it
Likewise.
next year. Thank you,
Likewise,
everyone.
let's do this again.
Thank you, everyone.
Thank you, everyone.
And thank you for the attention to all of you. We'll see all the rest, you know, follow up by email, you know, so also for the question that we couldn't get to in time.
Thank you, everyone. Bye.